Hello everyone, I'm Siba Yadav. Welcome back to my YouTube channel. Welcome to my YouTube channel. If you people are new here, you should totally subscribe to my YouTube channel and press the bell icon. So today in this video, I'm going to talk one of the most important topic, that is the statement of the cash flow. So in this video, I will talk about the meaning of the statement of the cash flow and everything about the specification of the statement of the cash flow. Okay, so watch this video till the end without wasting any more time. Let's begin. So guys, before starting these things, I have to start from the meaning of the statement of the cash flow. What is the meaning of the statement of the cash flow? So generally it refers to the movement of the funds on out to or into of any business organization. What is say that about the movement of the fund? Either the cash is inflow or outflow. That thing you have to generally understand about the meaning of the cash flow means the movement of the fund, where the fund is moving, either it is inflow or outflow of any business organization. That is the meaning of the statement of the cash flow. The second thing which we have to notice that how to prepare the statement of the cash flow. So generally it can be prepared under three different head account. So what are the things, these three different accounts? Number one is that statement of the cash flow can be prepared under the three different accounts under the direct method. Number one is that from the operating statement. One statement of the cash flow can be prepared under operating statement. Number one is, second one is the investing activities. The third one is financing activities. So these all are the things which are recorded when preparing the statement of the cash flow. So what I just talked about, number one is the operating activities, investing activities, and financing activities. The point will come here how we can prepare the statement of the cash flow under the operating activities and under the direct method. So what are the things which would be involved under operating activities? What kind of information would be recorded under the operating activities? The first thing is that number A, you can talk about cash sales and collected from the customer. When you sell the cash, we have to collect those money from the customer. That customer is our debtor. So what you have to think, understand what you are going to think. First you have to understand before net sales. Before you have to understand about net sales, then after you have to understand that cash sales means what kind of thing is going to be recorded. Debtor, either the debtor is increasing or decreasing. That thing you need to understand, because when you sell the cash, when you sell any kind of thing, the debtor is the one who is going to pay the amount of money. So you have to understand either the debtor is increasing or decreasing. So that debtor, what is the meaning of debtor? You can talk account receivable is the debtor. You can talk about bill receivable is the debtor. These all are the debtor. So you have to understand either it is increasing or decreasing. When the debtor is increasing, it is a negative, it is an outflow. Okay, when your debtor is decreasing, it is an inflow. So you have to understand it is inflow. Okay, and you have to understand discount allowed. If the discount allowed is given, you have given the discount to your debtor, so it is a negative thing for you, it is an outflow. Okay, so provision for debtor, if there is a provision for debtor, then it is a positive thing for you. When it may be inflow. In this way you will calculate this thing. The second thing, cash purchase and pay to the creditor. To whom you are going to pay? Your creditor. So first thing you are going to record cost of goods sold. Then after, the second thing you are going to record that inventory. Either inventory is increasing or decreasing. If the inventory is increasing, it is a negative thing for me when it is an outflow of your organization. If the inventory is decreasing, it is an inflow of an organization. Inflow cash. You have to understand. The second thing you have to understand about it, either the payable means either the creditor is increasing or decreasing. Account payable is increasing or decreasing. If the account payable is increasing, it is a plus point for you, for your organization. When it is a positive. If the account payable is decreasing, is a negative. So in this way you have to understand account payable, that may be the bill payable, that may be outstanding expenses, that may be, you can talk about advance income. So these are the things which you have to understand. The things which you need to understand, either increasing or decreasing. If the payable is increasing, if your creditor is increasing, that is a positive thing for you, that is an inflow for your organization. If that is decreasing, that is outflow for your organization. Okay, so after preparing this thing, you will come in the third point, C number. So what you will write in that, cash paid to the employee and other operating expenses. So what are the things which are going to record under the cash paid to employee and other operating expenses? So you will see here like office administrative expenses, general expenses, and selling and distribution expenses. So this kind of things is going to be recorded, and along with that, outstanding expenses, prepaid expenses and outstanding expenses. Prepaid expenses is your asset. You have to understand this is your asset. If your prepaid expenses is increasing, it is a negative thing. outstanding expenses is just like a liability. If it is increasing, it is a plus point for your organization, means it is inflow for your organization. But if outstanding expenses is a decreasing, that is a negative thing, that is a outflow for your organization. Okay, in this way you will calculate this thing as well. The fourth point which you are going to understand, which you are going to calculate, that interest paid. Here what you have to do, you have to pay the interest. Interest paid is negative. When you pay the interest, the cash will be outflow for your organization, and that should be paid according to income statement. So what you need to understand that interest paid is payable. If the interest is payable, then plus point for you. If it is what you need to understand, it is increasing, means interest payable is then plus point for you. As it is a decreasing, means you have to, it is a negative thing for you. In the same way, the next one when you are going to talk about, fifth was tax paid. When you pay the tax, so the cash will outflow for your organization. So you have to understand that it is also recorded as per the income statement, that can be calculated. If the interest payable is increasing, what you are going to, interest or tax payable is increasing, that is a plus point for you, for your organization. That is a cash inflow for your organization. So it will be plus point for you. So after that, what you are going to do, you are going to record the cash flow from operating. You are going to before extraordinary item. So cash flow from operating before extraordinary item. So how you are going to record? A means cash sale, which I talk about above. A minus B, C, D, E. This all thing you have to deduct. Then after you will talk about that cash flow from extraordinary item. Before it, there was one thing I forgot, that was non-operating income. You have to record. Non-operating income means whatever the income, whatever the short amount of income which you are going to get from your organization, like interest received, dividend received, and other kind of rent received, this kind of thing is going to be recorded. So after doing this thing, you are going to do that cash flow from extraordinary item. Okay, so you have to do that cash flow before extraordinary item. So you will record A minus B minus C minus D minus E. Then after you have to do cash flow from extraordinary item. So what are the things which are recorded? Cash flow from extraordinary item. So extraordinary item means short-term loan and short-term investment. Like a short-term loan you have taken and you have made those amount of money in investment. So these are all things short-term. You can talk about extraordinary item. So then after you have to understand the cash flow from operating activities. By doing all these activities, you will see the cash flow from operating activities. Okay. So after that will come number 2 point. Number 2 point is cash flow from investing activities. So we are going to talk about how to prepare the cash flow from investing activities. Okay. So for that you have to understand about what are the purchase of the fixed assets and sale of the fixed assets. So these are the things which are recorded under the cash flow from investing activities. If you have purchased the cash, if you have purchased the fixed assets in a cash, then what you understand? The cash is outflow. While purchasing the fixed assets in a cash, it is outflow for your organization. And when you sell the fixed assets, you will receive the cash, so it is an inflow. And for additional investment, you have made an investment in somewhere, so cash will be outflow for that organization. And when you sell that investment, like security or any other thing, so that cash will inflow for your organization. Okay, so in this way you will calculate this. So the result will come cash flow from investing activities. After that, the third one is remaining, that cash flow from financing activities. So here the point will appear that how to prepare the cash flow from financing activities. So for that reason, you have to understand about what are the things and what are the information which would be recorded under the cash flow from financing activities. Number 1 is issuing of shares, preference shares. If you're issuing of share, preference share is increasing, you will issue, so you will collect the amount of money from your customer, so cash will be inflow. Okay, issuing a share premium, increase your share premium, so that is plus point for you, cash will inflow. After that, issuing debenture, if there is a debenture is issued, so you will collect the money, it is also inflow. After that, what you are going to understand is that increase share premium and loan taken. When you take the loan, the cash will inflow in your organization. So these are the plus points. These are cash inflow for your organization. So the next one, what you are going to do means you are going to less that is a negative thing. That is a redemption of preference share, redemption of debenture, redemption of equity shares, and payment of the loan, payment of the dividend paid. So these are the negative things. So you have to understand these are the negative things. So it will be the cash outflow for your organization. So after this thing, the result which will appear, that will be the cash flow from financing activities. So under this thing, we have calculated cash flow from operating activities, cash flow from investing activities, cash flow for financing activities. So by the comparing between this thing, we have to get that cash flow from you can talk about statement of cash flow, you will calculate by doing what you are going to do. Changes in cash and cash equivalent. What are the changes in cash and cash equivalent from the 3 different head? operating, investing, and financing. Then we will say that changes in cash and cash equivalent. And the result will compare. By comparing the three things, the result will appear. So after that, what are you going to do? Next, after you are going to add the opening cash balance. You are going to add the opening cash balance. You will have to add there. There will be given in the balance sheet. Then after, closing cash balance would automatically come because the closing cash balance would be given in the balance sheet. By doing all this thing, when you add the opening cash balance, the result will automatically come for the ending cash balance. If that is going to happen like that, then that is a true thing. That is a true thing. So this is the all the specification. This is the, all this idea how to understand, how to prepare the statement of the cash flow. What is the meaning of the statement, the cash flow? So by doing all this information, by understanding in your mind, you will be able to clear up about the statement of the cash flow. When that kind of question is going to come, you are going to record. You are going to write very nicely. Okay. So these all are the information which I wanted to talk, which I talk in front of you guys. It is very nice idea how I learned. So if you have like this video, like, subscribe and comment. Okay, and we will talk in the next video. Thank you so much for watching.